A very good evening to all our viewers today. Today we have with us a very special guest who had a career for 23 years with Tata Group, where he served as the first brand custodian of the Tata Group, Chief Ethics Officer of the Group, Chairman of Tata Global Sustainability Council, and member of Group Executive Council at Tata Sons. He has been a chairman of the Environment Committee of Federation of Indian Chamber of Commerce and Industry (FICCI) and is a member of the Council of Management of the Forum of Free Enterprise. In 2007, the World Economic Forum honored him as a young global leader. He is also a part of inaugural class of the Confederation of Indian Industry Aspen Institute India Leadership Initiative. He passed as a B.Tech from IIT Delhi, followed with Masters and Doctoral in International Relationship on Rhodes Scholarship at Oxford University. He did his doctoral in Global Environment Politics, which was published by the Oxford University Press, and he's an author. He's authored 3 books by now. His second book has been on his work experience at Tata, and his new book is on Outlast How ESG Can Benefit Your Business, which has been co-authored with Dr. Colonel Rajiv Kumar and has been published by HarperCollins. Let us all welcome the chairperson of ECube Investment Advisors, Dr. Mukund Rajan. Welcome, sir.
Thank you. Lovely to be here with you. Thank you, Harsha.
So we are all honored to have you with us today. So you studied chemical engineering and thereon developed an interest in the environment in the 1980s, leading to your dissertation on the topic Global Environmental Politics, India and North-South Politics of Global Environmental Issues at the University of Oxford. Why was there a transition in interest to focus on environment at that time?
So I was, as you rightly pointed out, reading international relations, and I was very excited about the geopolitical changes that are taking place in the world, including at that time, the late 80s, the collapse of the Soviet Union and the implications that would have for international politics. But in that same period, for the first time, there suddenly started emerging what are known as global environmental issues. These are issues that impact all nations. No one country on its own can resolve them. So cooperation is a must. And the issue that first drew my attention at that time was the politics of ozone depletion. If you remember, at that time, there was an Antarctic ozone hole that was becoming bigger and bigger. And it was supposed to be caused by chlorofluorocarbons or CFCs that were being generated across the world, including in developing countries like India. So a lot of pressure started being placed on developing countries to control the production of CFCs, which get used in refrigerants, in aerosols, and so on. And India, at that time, we had a very feisty environment minister, Maneka Gandhi, who took the stand that really why should the developing countries pay for these issues, which have been largely caused by the developed world. And so that sparked my interest in the politics of these issues, how they get resolved. And very soon after that, in 1992, you had the Rio Earth Summit, which talked about a further range of issues, including tropical deforestation and, of course, the big issue of global warming. For the first time, that got discussed at Rio, and therefore, you then had the Framework Convention on Climate Change that emerged from Rio. So I think the fact that these issues were new, that there weren't easy answers for them, and there's a lot of politics around them at the international level drew my interest. And therefore, I moved from looking at just strategic geopolitical questions to the politics of global environmental issues, which is then what became the subject of my doctoral dissertation.
Wonderful, sir. And now you've grown most of your career with the Tata Group and recently ventured into entrepreneurship, establishing ECube. What led to that transition again, and how was it working with the Tatas?
So let me split that into two parts. One is the focus on entrepreneurship. I think when you spend many years in a very large group with the kind of umbrella and shelter that the Tatas, as India's largest corporate house, provides, it's obviously not an easy decision to make to leave and to start something on your own. At the same time, I think around 2018, when I was leaving the group, I felt that I had acquired a lot of experience in the Tatas across a range of issues that I thought were going to become very important for corporate India, essentially around the ESG transition. And I think two critical drivers. One was the new focus on corporate governance, embedded in some of the actions that government was also taking through the Insolvency and Bankruptcy Code, the formation of the National Company Law Tribunal, and the many cases that were coming before the courts relating to poor corporate governance in corporate India. The second big driver was the concerns around global warming and climate change. 2018 was a year which was dramatically different in terms of temperatures across the globe, in terms of unprecedented droughts in some countries, unprecedented floods in others. It is becoming clear that climate change is now becoming an issue that nobody could ignore any longer. Even though actions had been taken after the Paris Climate Treaty in 2015, it became clear that the urgency was much more pronounced and probably much bigger ambitions needed to be embraced in terms of controlling carbon emissions. So in 2018, I felt the time was right to really do something on my own to work with corporate India in that transition that is going to become necessary. And entrepreneurship, I'd had a little bit of a taste of it when I was at the Tatas. I actually pulled together an offer backed by private equity funds to acquire a business that I'd been involved with for many years in my past in the Tatas, which is telecoms. So we put together a management buyout offer to acquire the broadband business of the Tata Group. We mustered private equity funds that are willing to put in over $1 billion. And that sort of opened my mind and my eyes to the fact that there is a lot of capital available in India if you have the right ideas and you have the right team to work with you. So, that in a nutshell is what sort of gave me the confidence to move forward and set up a new operation. We called the company, along with my co founders, also from the Tata Group, we set up a company called ECube. And as the name suggests, it's drawn from three E's: engage and empower for ESG. And so in 2018, we felt the Indian market would become ready for an ESG transition that we could be supportive in assisting.
Wonderful, sir. Also, I'm sure a little bit motivation from the Stand Up India was also responsible.
Correct. I think a lot of interventions that government has undertaken, and lot more support, lot more capital that's now becoming available to the startup community. I think the number of unicorns that you're seeing in recent times is one reflection of that. You also asked me a question about the Tatas, and obviously, the experience one had in Tatas as chief ethics officer, looking at codes of conduct, looking at corporate governance, as chairman of the Sustainability Council, looking at many of the new issues that are beginning to impact the group. One in particular that I will call out was in the 2015-16 timeframe when Norges Bank, which manages the Norwegian wealth, overnight took a decision to decarbonize their portfolio. And they were one of the significant investors in one of the Tata companies, Tata Power, which at that time was largely delivering coal fired thermal power. And because of this one action of Norges Bank, I think it started a chain of events at Tata Power, which led to that company actually pivoting away from thermal power, away from reliance on a fossil fuel like coal, to look at renewables in a very big way. So that opened our eyes in the Tata as to how quickly this agenda was beginning to change and how transformative it could be, particularly because investors who have capital were now calling the shots and focusing a lot more on critical ESG issues, including climate change. So, really, one thought the timing was right to do something really in the ESG space for the Indian market at that point.
Now, that's very interesting. The term ESG itself was coined in a study by the UNGC, Who Cares Wins, which you see very well right now, which was just 12 years back, and the concept has definitely grown exponentially. eCube is an ESG platform. So, what products do you envision launching in the space of ESG?
So it's going to be a range of products that really assist companies that are making the transition. The first and simplest is, in a sense, consultancy and advice that we can offer companies. So we've actually launched a stewardship services platform that assists companies that are looking at an ESG transition. Many Indian companies, as you know, are also going to be impacted by the new SEBI, the Securities and Exchange Board of India, mandate that the top 1,000 listed companies in India need to start producing what is called the Business Responsibility and Sustainability Report, the BRSR. It's voluntary this fiscal, and for the next fiscal becomes mandatory. So many companies also need help in crafting what is their ESG and sustainability story, how they should present that narrative to the broader markets, how they should communicate to investors. So that's one pillar of what we are doing. The others are really focused around investment, and both on the debt side as well as equity. So we're putting together a climate finance NBFC, which will be a first of its kind in India, that really lend to the mid market, where many companies are trying to undertake the climate transition and need capital to really invest into capital investment that is relevant in areas like energy efficiency, carbon emissions control, reduction of pollution, and so on. The third aspect is what we might do in the public markets, where we're looking at a strategic alliance with a mutual fund house. And really, the idea here is to back mid market listed companies that have powerful ESG intent and that could become tomorrow's large caps. There's a lot of research that shows that if you pick these companies early on in their journey, these typically tend to be the multi baggers that outperform the broader market. As you know, you already have a fair amount of evidence in India that in the public markets, well performing ESG stocks, which currently typically tend to be the larger companies, have tended to outperform the broader market. So if you look at the MSCI India ESG Leaders Index as one illustration, that has outperformed the broader MSCI index from the time of its inception and for most periods of time thereafter, including the last 10 years, the last 5 years, and the last 3 years. You have similar data from the National Stock Exchange. The NSE Nifty 100 ESG index has tended to outperform the broader index. So I think there's enough evidence that if you can pick the right companies early on in their journey before the rest of the market has already identified and piled into those, you can actually be sitting on some very handsome returns. So that is part of what we would also be doing at ECube. So across advice and investment, both in the form of equity, see, those are the products that we will be offering.
So the companies that y'all are looking to invest, would they have to be listed? The mid market company, they have to be listed, or they could be social entrepreneurs also who are working towards climate change.
So on the public equities fund, by definition, they'll all have to be listed. On the debt side, we could certainly look at unlisted entities and smaller listed entities as well.
Wonderful. To back this up, you've also authored a new book called Outlast: How ESG Can Benefit Your Business. Please share more about the same.
So the idea was really to demystify this subject of ESG. I mean, it's one more acronym in a sea of acronyms, and a lot of people are very confused about what ESG is all about. What difference does it make? In many ways, it's really back to basics. How do you run a clean business, and how do you ensure that your stakeholders will trust you? Ultimately, if you want to be successful in the corporate world, that's really what you want. So, a lot of my experience in the Tatas, along with my co-author, Colonel Rajiv Kumar, we both worked together and witnessed a number of ESG-linked crises when we were working at the Tatas. We thought we could both share the benefit of many of the cases and examples on how Tatas did it, but also a lot more case material we've gathered both from other Indian companies as well as other parts of the world. So the idea, as I said, is really to demystify the subject, try and communicate quite forcefully that there is really now little alternative left for companies if you want to remain successful in the future, but to embrace a strong and powerful ESG agenda. Investors are now demanding this, customers are demanding this, government and regulators are demanding this, and your competition is really lifting standards very fast. Globally as well, this has become a very, very well accepted agenda. Probably the European Union is much ahead of the game compared to others, but the US now under Biden is also catching up fast. So, developing markets like India that have ambitions to grow their economies have to really understand the changes that are taking place. And in the book, we point out that companies that are not cognizant of the pace at which this change is taking place could find themselves in a very similar situation to which many of India's largest companies found themselves 30 years back when you had liberalization, and for the first time, Indian companies are exposed to foreign competitors. I think the same kind of scenarios likely to play out in this decade because of some of the urgency and stress around ESG issues, including climate change. So, really, the book is a clarion call to corporate India to take note of the speed at which change is taking place and to understand it's so important to identify what are material ESG indicators for your business, your industry, and to demonstrate to your stakeholders, including very importantly, the investors who provide the capital for you to grow, that you're doing your best to actually improve on your ESG quotient. So that's really what the idea of the book was about. And because we are in that space, one had access to a lot of information, which we've tried to now pull together in a fairly easy to read and easy to comprehend fashion.
Excellent. We are all looking forward to having a copy of the book now. Now, you have a lot of information on this subject, being in that space. But still, the parameters and indicators and methodology for evaluating ESG ratings are very dynamic. What is the basis to state which one is better than the other from an investment perspective?
So it's a very good point you make. And in fact, there are lots of examples people will show of companies that are rated very highly on one scoring framework and then rate poorly on another scoring framework. So obviously, there are differences in the way in which these frameworks have been set up and the kind of insights on the basis of which the scoring models have been developed. What we suggest in the book is don't get distracted by the fact that there are different frameworks. Focus first on ensuring that you have in your business a bespoke ESG strategy predicated on material ESG considerations for your business and your industry. That's not very hard to find. Also in India, because of the BRSR protocol, which SEBI has now mandated, as I mentioned earlier, voluntary this year, mandatory from next year, there's already going to be a requirement to provide data on a certain basis. So at least ensure that you get up to scratch with information, transparency that you provide with critical data points and key ESG metrics as per the BRSR. The whole point of all of these frameworks is that over time you can measure from year to year whether you're improving. So pick whichever one you think is most useful or easily comprehended by you, whether it's GRI, the Global Reporting Initiative, or integrated reporting, or just start with putting together the information for the BRSR itself, which will stand you in good stead. Also, this concern that there are so many different frameworks and they don't necessarily talk to each other, there isn't comparability across industries, across markets with these frameworks. All that is going to change in any case within the next 2 to 3 years. At Glasgow last month, there was a commitment to now put together this new framework guided by the what is now called the International Institute, International Sustainability Standards Board, ISSB. And that will draw on the work that has already been done by entities like Integrated Reporting, the Sustainability Accounting Standards Board, SASB, the Climate Disclosure Standards Board, CDSP, and the TCFD framework, the Task Force on Climate-Related Financial Disclosure. So I think pretty soon we will, in any case, have something that for at least accountants becomes a much easier framework that is universally acknowledged and can be put in place. But till then, pick whichever framework is easiest for you to use and start measuring the critical material ESG data points and seeing whether you're improving from quarter to quarter and from year to year. That is really the intent. And if you can do that and you can communicate your story, you have a strong narrative around your commitment to do better, I think that's all that investors are looking for. Nobody's necessarily expecting that overnight a company that is early on in this journey is going to become a superstar. But what they want to see is that there is an intent to improve and it's in the right direction. And that's why I said that there's a lot of research that shows that if you pick these companies early on in their journey, these become multi-baggers over time in the public markets because they're committed to doing the right thing, they start making the right investments, and they do it in a calibrated and careful fashion. Nobody can afford to make overnight investments to completely redo a manufacturing plant or change a business model, but it can happen over time with gradual investment. So people are willing to give you time providing you have the right strategy and able to transparently communicate it to your critical stakeholders, including your investors. So don't be, put off or concerned by the fact that there are all these different frameworks. Ultimately, they will converge, and importantly, just start on that journey. That's the most important message.
Excellent. One of our viewers has they've asked, environmental social governance has become a buzzword now, and what are the best ways to create a ESG-driven company?
I think the most important place where change begins in any company, I believe, is the board. It must start with the tone at the top. So the board and the direction that the board gives the leadership, including the CEO, is very critical. And at that level, there must be a commitment to embrace an ESG agenda. Increasingly, you're seeing in India that companies are creating what are called ESG committees of the board. This has been done most recently by Airtel, before that by Ashok Leyland, before that by Infosys. Other companies, including several from the Tata stable, including Tata Steel, have added sustainability to the mandate of the CSR committee of the board, which is already a mandatory committee of the board. So start with placing the focus of attention in terms of governance at the level of the board and ensure that the board works with the senior leadership to put together an ESG strategy for the company. Thereafter, the senior leadership has to be mandated to cascade that strategy and ensure that the execution happens in the right locations across the company. One way of ensuring that key deliverables are, achieved is to link the compensation of the senior leadership with the outcomes that have been promised by the leadership. So increasingly, companies like Wellspun, Marico are beginning to do that. So the CEO's KRAs and bonus depends to an extent on the ESG outcomes that they deliver. After that, you obviously need a set of systems and processes in place. You need to ensure that the whole sustainability agenda is mainstreamed into the broad strategy of the company. And you're going to have to start measuring and reporting the discussion we just had. Pick whichever framework makes sense to you. If nothing else, start with the BRSR itself. And then try and ensure that you have a roadmap towards the kind of improvement that you want to achieve over time. And that will be obviously benchmarked with some of your peers, some of the global best practices, some of the best achievements you see around the world. And start reporting on that and measuring yourself from that. I think those are the ways in which you really undertake change. Very importantly, I think at some point in your journey, you need to get third party validation of what you're doing. Initially, it's all right to have it all in house, but at some point, you want to ensure that you're on the right track. A lot of the data that you're reporting has been assessed and validated by third parties. And that's where institutions, agencies of the kinds that we deal with become relevant and important in people's ESG journey. So I think a lot of this will be what you'd expect to see in companies that are beginning to embrace change. The last point I'll make is a lot of the changes that will be required going forward will need much greater investment by companies in R&D and innovation. And Indian companies don't have a great reputation for being big spenders on R&D and innovation. As a economy, we have one of the lower R&D to GDP ratios in the world. It's around 0.7% of GDP. China does three times that on a much larger economic base. The United States, United Kingdom, Germany, all of them are much bigger spenders on R&D, and that's the reason many of their businesses retain their edge. So I think Indian companies, particularly in this decade, when so many new factors are also going to be impacting business, including climate change, the need for sustainability, responsiveness to environmental issues, I think we'll have to spend much more on R&D. And that's something one would like to see a lot more of in corporate India than is currently the case.
Excellent. Although I have a question on your thoughts on sustainable economy and how to achieve, we have received another question from one of our viewers, Mr. Rajesh Ingle. Have you faced challenges to convince the leadership or boards, and any tips? How do you convince the board members?
I think most boards are staffed with people who've been veterans in industry who have a lot of experience, and therefore they understand what change can do to a business. Uh, Most of the leaders today have been through the period in the 1990s when some of India's household names sort of vanished because of the opening up of markets and the entry of new competition. So I don't think it'll come as a surprise to any of them that there are going to be these challenges going forward. Where they need support and assistance is trying to understand, what are the material issues, where can they actually bring in change, in what time frame should they consider that change. Because as I mentioned earlier, some of it will require capital investment, a lot of it will require technology inputs, which they may not necessarily always have access to. That's where then expert input, third party validation all becomes very important. So I think most boards are willing to listen. And I think now, with the kind of speed of change that we're beginning to see with the impact of extreme climatic events, I mean, in a city like Bombay, where many corporate boards meet, you never had cyclones in this city, right, for 100 years. And suddenly, in the last 2 years, you've had one a year. So people understand that something is changing and it's changing very fast. And we need to have a plan to be ready and prepared. So my sense is, don't paint a picture of only doom and gloom, because people get put off with that. But they need to be aware that change is coming fast and it can be quite dramatic and sometimes frightening. But they need answers. They're looking for solutions for the future. They're also looking, some of the forward looking ones, for opportunity. So you need to sort of lay out the landscape, point out to them where they need to take certain bets, what technologies they need to adapt to, what potential partners, if they don't already have access to technology, what kind of capital infusion will be required, and give them a roadmap. Like I said earlier, you don't need to see change happening overnight, but you need a roadmap to that change. And if companies are given, if boards are given some guidance on that, I think that they will find very valuable. And most boards are forward looking in that sense. Once they have the instruments, the tools, the mechanisms, they're willing to then embrace the changes that will be required.
That's very well said. My question to you was, what is your thought process on sustainable economy, and how do you foresee that we could achieve sustainable economy?
So I don't think there is an end point that you can say this is the sustainable economy that we need to have. It is going to be a journey, and in that journey, I think every stakeholder has to play a part. That includes customers who need to inform themselves about the quality and the sustainability of products and services that they consume. It's got to be the regulators and government understanding what kind of legislation rules need to be brought in and how well they need to be enforced. It has to be corporates, obviously, all the issues we've discussed about understanding the pace at which change is coming. It has to be investors figuring out how to drive change using the power of capital. So everyone has to play a role, and ultimately, I think many times we feel as individuals when we look at these issues, we are alone by ourselves. What change can we initiate? But all of us have a duty and responsibility in each of our contexts, at home with the family, in the public settings, in the non-profits that we might be supporting, in the corporates that we work with, to try and push for these changes based on data, based on more information. So I think all of us have a role to play, and a sustainable economy is not going to happen by magic. It's not somebody else's responsibility. It's all of us putting our heads together, and industry by industry, sector by sector, figuring out what makes the most sense and what time frame can you get to a point where all the good things happen. Waste is minimized, pollution is minimized. You're reliant on much more of renewable energy. So there is a balance that you've achieved between really, people, prosperity, and the environment.
Excellent. Now, looking at the way things are shaping, what is your vision for responsible investments for the coming 5 years?
I believe that already, a large amount of capital is going into what is called sustainable investing. By some measures, in Europe, around half of the new fund flows are going into sustainable funds, and a quarter of the funds in the US are going into sustainable funds. But eventually, my belief is that everything will become a sustainable fund, because no investor worth their salt is going to be very happy about backing assets, investments, companies, businesses that don't have a long term line of sight to success. And therefore, industries that look as if they may end up with stranded assets, industries that are predicated on ways of doing business that are going to be quickly displaced by new technology and less polluting methods, all of them need to be very worried that no fund is going to be investing in them. So I do believe that pretty much all investing will fairly soon morph into some version of ESG or sustainable investing. I don't think there'll be too much differentiation in terms of the outcomes people are looking for. The strategy and tactics may vary. So, in some funds, already you're seeing that today. Some funds will exclude certain sectors right from the get go. For instance, there are funds that, like as you saw with the example of Norges Bank and Tata Power, that will say we are not going to invest in any company that has a certain percentage of its revenue or more based on fossil fuel consumption, or companies that will say we will not invest in companies that are dependent on tobacco sales because there's a big healthcare issue there. So there are companies that have an exclusionary approach. There are other companies that have an integrative approach. There are yet other companies that look at impact investing. There are entities, investors who look at an activist model. In India, you've seen a little bit of that in recent years. Elliott Management, for instance, really made a huge impact on the Indian IT services space by focusing on Cognizant and looking at what they could do with their strategy, eventually leading, amongst other outcomes, to big share buybacks that started in Cognizant, but then spread to the rest of the Indian IT industry. And by now, over 100,000 crores of capital has been returned by the IT industry via share buybacks, something that started because of Elliott's activism in India. So tactics may be different, but eventually all of these funds will be looking at sustainable outcomes, because that's the only way that your risks are reduced and your opportunities maximized.
Excellent. I have my last question, and Dr. Hopkins has also joined us. Now, IICSR, as you know, we are a dedicated institute for developing responsible business leadership. What initiatives could we take in our capacity to accelerate the process of developing responsible business leaders?
I think it starts with that question I think somebody had about how do you persuade the board. I think you need better information, you need education of your directors, of industry leaders. And once they understand the challenges and the context in which they're operating, the next thing that they're all looking for is the correlation with capital, because in the market, obviously, that's a very critical requirement. So, more research, I think, by organizations like yours on demonstrating the correlation between focus on material ESG issues and the outcomes that you can deliver in the corporate sector. In our book, we've talked about a lot of the research that people like George Serafim at the Harvard Business School have done that demonstrate a lot of these outcomes. But I think in the Indian market, there's still very scanty information, very scanty research that's available that demonstrates the correlation with Indian successes. And I think a lot more work needs to be done here in this market, and that will be very helpful in persuading corporate leaders, industry leaders that this is the right thing to do. As I said, your risks reduce, your opportunities increase, your resilience for the long term is established, and you can see success cases. Right now there's a lot of anecdotal information and a little bit of the data that I cited, the MSCI ESG Leaders Index, the NSE Top 100, and so on. But I think we need much more information to persuade many more businesses and corporate chieftains that all this really comes together very nicely and makes a lot of sense.
Thank you so much, Mukund. May I invite my fellow panelist, Dr. Michael Hopkins, please? Sir.
Can you hear me?
Yes, indeed.
Can you hear me?
We can hear you now.
Oh, okay. Thank you very much. Well, congratulations on your background. Three books on corporate responsibility. I was intrigued by the title of your last book, Corporate Responsibility and ESG. Isn't corporate responsibility part of ESG, or the other way around? Isn't ESG part of corporate responsibility? So,
very much so. In fact, my first chapter talks about the age of responsibility, and I think whatever moniker you want to attach to it, ultimately is back to basics. And actually, we started with that with Harsha, that ultimately it goes back to the basics of how you do business and how you win the trust of your stakeholders. No business can be successful in the long term if you haven't earned the trust of your stakeholders. And really, all this fuss about ESG, call it whatever name you want, but it's ultimately about rebuilding that trust between the corporate world and stakeholders.
Well, as Harsha knows, I totally agree with that, because my definition of corporate social responsibility has been satisfying all key stakeholders and treating them responsibly, also asking them to be responsible as well. So being two ways, but I'm sure you've covered that. I had two other thoughts as you were talking. One is something I've rarely been asked in recent years. I was when I started working on corporate responsibility 25 years ago. Is the type of product part of the choice in ESG? For instance, I call them attack industries. Some people call them defense industries. I think we should be careful there. Or cigarette producers, for example. I remember many years ago advising British American Tobacco on corporate responsibility, corporate social responsibility. So you can equally ask me the same question, but I'm interested to know your response. And well, my third question is, what do you mean by social in ESG? And how does that help a company to make a profit? So thank you very much, and I'll be delighted to listen to you, and I'm very impressed with what you've been doing. So congratulations.
Thank you. So the question on products, I think everything has a context, and obviously you go back to market needs and maybe wants to some extent. There is a lot of talk now about the kind of consumerist society we've created, where a lot of products don't necessarily get generated because there's a crying need for them, but it's artificially stimulated demand that is generated. And our Indian Prime Minister at Glasgow also talked about how the developed world, which is constantly preaching to developing countries, needs to look inwards and introspect on the kind of consumerist society that we've created everywhere, and whether many of the products that are creating this impact on the natural environment are really necessary for anybody's well-being. So that's certainly an issue, and I think again a lot of the values that we bring up our children with, that get exemplified later in life, the context in which we explain how you're leading your life becomes very important. So education, values orientation, communication becomes quite critical. And then you get to the point where businesses are actually creating these products. Each product in turn, I think, needs to be looked at in its individual context. A lot of talk now about how do you try and push the envelope on the circular economy, ensure that in each industry you're really testing the limits of what companies can do with currently available technology, or at least start investing in R&D and innovation to really figure out how they can get to a truly circular economy rather than the linear sort of create, throw, and then waste kind of culture that has become part of the consumerist society. So a lot of work to be done, but the good news, I think, is that more and more companies are waking up to the fact that their audiences, their customers, retail investors, many constituencies that are very concerned about these issues and would like to see them to do more. I mean, one of the nicest sort of branding and marketing sort of ploys that I saw some years back was, I think it was KLM Airlines, which actually tried to coach and guide potential customers about alternatives to travel by air. And so that's sort of going almost to one extreme where you're telling people, don't use my service because you might not need it. There might be a faster and more environmentally friendly way to get you from point A to point B. And that's sort of when you know that people are much more evolved in their thinking on these issues. Um, so that's what I'd say about your first question. And in the meantime, I've forgotten what your second question was. Would you mind repeating that? Sorry, I think you're on mute, Michael.
Yeah, yes, you're right. I'm so used to Zoom, not to this one. Sorry. But also, I'm in a place where not too much noise is welcome. But yeah, my question was type of product. I think you covered that a little bit. Is type of product part. As I said, I worked in the tobacco industry, and even today, people criticize me for that. And they say, "Why were you working on corporate responsibility in the tobacco industry when tobacco is a no-no and it just basically harms people?" My response to that was to try and make them more responsible. And in fact, at that time, 20 years ago, my colleague then invented the vapor cigarette. But even that is dangerous today. We didn't know that, but over time we found that too. But I was appalled always when working with that company was that they did talk about corporate responsibility and they had a very wide stakeholder view. But they were trying to increase smoking in emerging market economies where there are young people. And I wasn't particularly happy about that. So we all left in the end, the company, but that's another story. So that's one question, is on the type of product. My second question was probably a little bit more difficult or easier to answer. I think you're on top of all these things, so it's not difficult. But what do you mean by social in ESG?
Okay.
And
so,
how does it help to make a
yeah,
profit?
correct. So on social, I think it's very simply the engagement with human beings, both within and outside the organization. Within is obviously the employees and the way you are including them in your strategies and your perspectives on growth. And externally are the communities to start with that get impacted by your operations, the kinds of customers are going to be using your products and services. So your engagement with, literally in my definition of social, any human being is really part of social. And how do you measure, your impact inside the companies? A range of issues you could look at, including the diversity of your organization, what it says about the fit with the kind of role you want to play in the community. Does it sort of sync up well with the kinds of communities you're trying to serve? In India, the big issues are obviously around gender, around the employment of members of what are called the scheduled caste and scheduled tribe communities, and so on. So diversity would be a big part of it. Compensation, I think, says a lot about the way in which a company thinks about issues around equity. And therefore, a lot of the focus on CEO pay, which sort of straddles between social and governance, how much you pay your contract workers, what kinds of terms and benefits, what is your approach to issues around employee safety. So a whole bunch of issues around people inside the organization and then people outside, the way in which we engage with communities, the investments. In India, for instance, we have this legislation around CSR, corporate social responsibility, 2% of net profits. How is that being invested? What kind of engagement do you have with stakeholders to figure out where that capital should be spent sensibly, in a way that demonstrates that you really have care and concern for the well-being of the broader society. So it would include all of that. And you pick out, obviously, whether depending on whether you're a company in manufacturing, whether you're a company in services, where really you're likely to have the most impact, and then try and focus on what you can do best to engage with all of those members of society better.
Yeah, thank you for that very wide-ranging answer. We could continue more, I know, but Harsh has got other people to talk to. But so thank you very much.
Sure. Thank you for your questions, Michael.
Hope to meet you one day.
Absolutely. Likewise. Look forward.
Thank you, Dr. Hopkins, for the lovely questions you've asked. Dr. Rajan, it has been a pleasure and an honor to speak with you and to learn so much from you in such a short span of time on ESG and the wide array of areas it covers in the Indian industry and the global trends. Any final message to all our viewers, our students, and the peer group on ESG and sustainability?
Really, I think this is a journey. Like I said earlier on your question about a sustainable economy, I don't think there's necessarily an end point. There's a lot of evolution that is taking place. We live in a world where markets are relatively integrated, relatively interdependent. Technology is fast changing. But one thing that is now very clear is with the access to information, thanks to the World Wide Web, social media, and networks, people are now far better informed across the board, almost across all levels, than at any point previously in human history. And therefore, the demand for accountability, the demand for change in the right direction is going to be huge. And I think companies that get it, that understand that this would be really the decade that is, going to be very, very seminal in terms of the changes that you will see, I think are the ones that will really outlast the competition, and hence the title of our book as well. So don't panic. Don't feel that this is all doom and gloom and climate change is going to steal our bread butter and destroy our living. I think there's a lot that we can do that's constructive, and in the process, continue to sustain livelihoods, continue to sustain a way of life, maybe not exactly the same way of life, but a way of life that is still quite fruitful and fulfilling. So look at the positives, but make your plans now. There is no time to be lost.
Thank you. Thank you so very much, and such an insightful message to all of us. A different way of life.
Thank you. Good luck to you. Good luck to all of us. We're all in this together.
Sure, sir. Thank you so much for your valuable time, and we look forward to working with you in coming times.
Thank you so much, Asha. All the very best. Bye now.